Good morning. I'm joining you this morning from a Premier Inn in the sunny climes of Leeds on what is actually a fairly dreary morning. But I just want to give a quick update on what we expect from the market ahead. But I just wanted to explain my surroundings so you didn't judge me on the decor. So yeah, Friday the 19th. It's looking all good for the UK and for sterling at the moment. Actually, the wider market seems to be taking a fairly bullish view on the UK economy, and that's generally helping sterling and supporting the currency value. Politically, we've seen Michael Saunders, an NPC member. He's a perennial hawk, but he's been at it again, sort of talking up the UK, lacking any real supporting evidence to back up his views. He's been calling UK unemployment even lower than the current record lows, and indeed, talking up the wage book, expectations for wage inflation. Two kind of main points to support his view ahead to a nearer term interest rate rise. Clearly not comfortable that the rate rise in November was done and dusted for now. He's already looking ahead to the next one. Over in the continent, looking at the Brexit point of view, analysts are viewing that the transition deal that is getting close now, it seems, that will very much reduce the risk of hard Brexit. And again, that seems to be a wider piece that is helping support sterling. In terms of the rates that we're seeing, we've hit further new highs since the referendum, of course. Further new highs against the US dollar, touching over 139 on cable now, and against a single currency, we're comfortably over 113. So all good for UK PLC and indeed the value of sterling at the moment. Looking ahead for the day, today we've got the retail sales coming out of the UK. If it's a positive move, again, we could see 114 tested against the euro. All kind of really depends on what the UK consumers did and whether or not they played ball over the Christmas period. I know I did my bit to help, judging by the number of presents I had to wrap on Christmas Eve. I hope you did too. Over the Atlantic, stateside, again, it's all a bit of a mess at the moment. Politically, you've got a lot of political posturing and the threat of government shutdown. It's certainly not helping the value of the dollar. Chances are, as it has been before, this will all end up being a bit of a non-story. But whilst that political brinkmanship is ongoing, it's certainly not going to help the value of the dollar in the short term. So look, there's a brief update from me. I've got to clock off, got a couple of meetings to run to this morning, across the Leeds market, as we are obviously expanding our reach into the north and across Yorkshire. FX Blue, clocking off. Take care everyone, bye bye.